All right, everybody, welcome back to another episode here on the Dividend Doggo Show, and I'm bringing you in for the weekly portfolio review. This is the end of the second week here of March. So today is March 12th, Saturday morning. Let's go ahead and take a look. As you can see, if you've been watching the past few videos, we were sitting up in the 730,000 range at the peak, and we've been kind of climbing down and going up, and this week is the first week where we have seen a pretty significant end of week downturn. So let's look at what the end of the week was for the week. This was by far the largest the portfolio has dropped in 1 week and stayed that low. So you can see that we were down in capital gains $18,063.19. We did earn some dividends for the week, which is fantastic, $131.22. That will be rolling in. It's usually right about a month on most dividends. Some are much shorter, but you'll see these come into the portfolio here soon. We did have some dividends come into the portfolio this week that I have not reinvested yet. But let's go ahead and break down just by sector real quick and take a look here how we did on across the board here. So healthcare was down pretty significantly. You can see Johnson & Johnson was pretty much flat for the week, but AbbVie was down 1%, and AbbVie's grown to such a large position in the portfolio that, being down 1% is $1,560 being in the red. Now, all of that is gains. When I look at overall all time, it's up $77,000. So am I really worried about $1,500 for the week? No, not so much. Let's go in and look at utilities. Utilities was relatively flat. If you look, Duke was up for the week. VST ended down just barely by $494. Again, this is another stock that when I look at all time, we're up $28,000 still. So there's really no concern or worry about this type of position. And that dividend is going to be rolling in here in just a couple weeks as well, which I'm super excited for. That'll be over $1,000 in the portfolio that I'll have to deploy and figure out what I'm going to do with. Now, where we had the big losses for the week, let's look at consumer here. Altria was down 5.63%. That's pretty huge. Coca-Cola was down 7%. This is almost staggering when you look at Target being down 7%, PepsiCo being down 7%. Costco was in the green, Lowe's down just under 1%, and Home Depot just under 2%. This is just largely going to be fluctuation. There's a lot of geopolitics going on right now. The stuff with the Ukraine, there's COVID still is a thing. I'm really not that worried about these positions. These are pretty high quality companies that will overall keep earning money even in a bear market. These are all companies that are going to continue to earn money. People are still going to drink Coke, Pepsi, eat snacks, binge their food for their emotional damage, and, smoke cigarettes, drink beer, repair things at their house, get the deals at Costco to try to save money where they can. Overall, not too worried about it, but it does create me eyeballing some opportunities for buying. I'm not going to lie. I've been looking at, I said I wouldn't add to Mo again, but if it keeps coming down like this, I'm definitely considering it, just because it does earn such a thick yield, and it's easy to take that yield and apply it later on to other things, even if the stock doesn't have great capital gains return. So let's go in and take a look at the average. We were down for finance, which finance has just been getting real beat up. If I look at the 1 month, it's down 14,000. If I look at 1 quarter, it's down just slightly, a little bit more. It's earned dividends of almost $600 this quarter, but it's also gone down in capital gains, $15,000. So looking at this breakdown for the week, Ally has just been getting smashed. This was really bad timing on this purchase for me. Most of you know that I just made this purchase and added this to the portfolio not that long ago, and everything's continued to go down. We're expected to hear some information from the Fed this coming week. So if interest rates start going up, I think that there's a chance some of these do recover a little bit. You can see just about everything was down, with Ally leading the charge at almost 20% down for the portfolio. And these are money weighted returns, so you have to factor that in and keep that in mind. But overall for the week, Bank of OZK held strong and was the only one in the green. And I was kind of kicking myself for not building this position up at least into the 20K range, because I think that this is easily a better growth opportunity than Bank of America or JPM. And I felt that way for quite a while. But overall, as you can see, it held up pretty well. Hingham being down 5% for the week, almost 5%, 4.4, is pretty wild. Because they're relatively stable and very high quality and very expensive to own. They pay a very, very low dividend. Overall, 3.8%. Let's see what the next week rolls into. With a lot of the stocks being down, obviously, Como Money is going to be down a bit. Schwab, SCHD. This is going to create a buying opportunity again for SCHD, because if you wanted this at a quality position, when you see this going down like 2.5% a week, this is, the dividends rolling in for this, I believe, next week. So I'm likely going to sink that money right back in and get shares at a better price. This is a buy and hold for a long time for me. I want to build this position up to over 100 grand. So if things keep going down, I will likely start socking away more money into SCHD over the next couple months. Berkshire Hathaway was actually in the green for the week. That's just such a workhorse and such a huge money earner, and they've just got such massive cash flow with Berkshire that they can make these just absolutely insane to me purchases of like ExxonMobil and Chevron and stuff as it's going up. They can buy these stocks and just get these massive yields on the future income. So that's pretty wild. Tech has just been doing its thing, which is go down after I bought more and bought back into the Apple position. Misery, if you watch this one, you're definitely right about these going down in the short term. Long term, I think that they've got some sustainability in their profits, and they're going to keep going up. The Apple presentation was pretty amazing. Hardware is just getting better and better. I'm excited to see what they're doing with the car in the next few years. Super excited for Microsoft, because they're just buying stuff left and right, picking up studios, gaining tons of cash flow, adding, just a couple extra $1 billion in cash flow per year by taking over Activision Blizzard. Things like that. These are big factors that are going to drive up their future revenue and future cash flows. So I'm okay with holding these, one quarter being down nearly 20% in Microsoft and 16% in Apple. It honestly just makes me want to pick up a couple more shares, because these are just high quality companies that just aren't going anywhere, and they're going to continue to do share buybacks and raise their dividend, because they're going to keep making money even in a bear market. Now, industrials is down very, very little overall. Cat was up almost 10% this week. This is one of those where I had kind of looked at buying more Cat last week, and I chose not to. And this clearly, that was a mistake. I was looking over the portfolio stuff, and I definitely should have put a little bit more in. Lockheed Martin had a little bit of a run up, so did RTX over the past month. And then, you know, if I pull out to 1 month, you can see everything is green for this pie. But on the 1 week, Caterpillar was up significantly. I think they did have their earnings call. I'd have to double check on that. I didn't watch it, which I feel kind of bad about because I am actually interested in the construction side of things and seeing how they're doing, because they're a world strategic player in, you know, the building and industrial industry. So I kind of want to watch that a little bit closer. So the monthly dividends, you can see that we had a pretty rough week, obviously, with tech being down. BST is going to be down. Owners rewards across the board was down about 4% for the week. And I'll jump into that so you can take a quick look at it. Amazon sitting in here, Domino's, Walmart, UPS. This is all the stocks that you can get discounts with using the M1 Finance credit card. Some of these are up to 10%. Some of them are 5%, 2.5%. Ones that are a real standout for me right now are Chewy and Netflix. Those are both 10%. GameStop is a 10%. Which you can see I only have a few dollars in GameStop. This isn't the meme play by. This has earned me over $200 in just the past 3 months in rewards that have gone right back into the portfolio. I bought all the Christmas presents for family members, bought new Switches, the OLED Switch from GameStop, and dozens of games and controllers, stuff like that, for everyone to be able to play Mario Kart and other stuff together as a family. So this has come back. You know, I've lost a few bucks, and it's not a big deal because that money is just rolling right back in via the rewards. So overall, I don't use all of these companies right now, especially, like, I haven't been to a McDonald's in months. You know, I haven't shipped anything with FedEx in months. But overall, stuff like Best Buy, who do use frequently, I haven't been to a Dollar General in quite a while. But overall, these are the slices, and these aren't even all of them that you can get a discount with. But overall, this is what I keep this pie for, and that's why I just kind of keep it in the monthly pie and have it allocated at like 1%. If I could lower the percentage to like near zero, I would, because I don't want money to reinvest into this when I turn auto invest on. But overall, that's kind of the way that the pie is structured right now. And that's kind of how our week went. It was a very red week. It was hard to watch this go down. It was a roller coaster. You can see we started the week off and we were up at 715. We went to 709, then we went right back up to 720, and then 716, 710, and that's where we ended the week. So overall, we've got quite a bit of money coming in via dividends this month still to go. We've got somewhere right around $1,940 to come into the portfolio via dividends this month. So even though the week is, you know, red, and the month will likely end up red, that's just my pessimistic prediction. We're going to have a bunch of dividends roll in, and I'm going to get to do some hefty purchases. Now that brings me to this point. The market was super red and a roller coaster, as you could see. But I wanted to save the dividends that were coming in, so that is what I did. Now, you can see here we had dividends roll in throughout the week. Johnson & Johnson, Microsoft, Target, UPS, Walgreens, and Yum Yum. Those all rolled into the portfolio. We're just going to leave that doing its thing. So we're just going to continue to keep going on this path for a little bit. I might reinvest and pick up a share of Microsoft this week. We'll have to kind of see how things go, but I am going to definitely wait to get a little bit of cash together to buy bulk buy a bunch of shares in the next week or two. So I might do a little micro buy, but overall I haven't quite decided yet. So that's kind of what the portfolio looked like. I want to leave you with one last thing that I haven't talked about, haven't revealed. So if you stuck with the video, I'm going to give you a little bit of insight into the IRA account that I have set up through M1 Finance. This is not the only IRA account that I have. However, I'm going to show you this because I want to talk about this topic. And this is the largest mistake that I have made in investing in the past 5 years. This I'm going to bring up and talk about because there are a couple things to keep in mind. The number one thing is perspective. As you can see, this portfolio is down just over $10,245. So we're down over 50% in Baba. When I bought into this, we bought in at $29,338.87. That's how much the portfolio had in it. This did have gains of, I only put in about 24 grand. So this is, I believe, only about 24,000. We'll take a look at that real quick. But overall, the net cash flow into the position was 29K. So we're down significantly, almost 50% money weighted average return in this stock. You can see we have 170 shares of Baba at a strike price of $171.13, and it is currently at $86. So this is absolutely wildly, this has been a roller coaster, and serious emotional damage. Like, it went down, it dipped down to like 23,000, then it went right back up to 30, and this was in the green at 30 grand, and I should have sold and just been happy with the 30K there back in October. And then it kind of hovered for a while there in October, and then it just started going down and came back up a little bit, and then just went down, back up, roller coaster, and now it's just on this huge decline. Now, I don't know particularly what will happen if these do get delisted from the US markets, which is the reason why it's continued to go down so heavily over the past couple weeks. It's not just the political stuff going on with Ukraine, Russia, and COVID. This is CCP and America saying they're going to delist these stocks. It's been the threat for 8-9 months now, and I know that investors did pile in a bunch of money into these stocks, and people like Charlie Munger, stuff like that, they can afford to have these losses and let them ride forever if they want to, because Charlie Munger's an old man who's got a lot of wealth and makes a lot of money every year. I am not rich, and we try to save a lot of our money, and I try to make the best decisions I can with stock going forward. And when I looked at Alibaba, the numbers did look very compelling, and I wanted to make sure that we had some more exposure. I had held Alibaba in the past, and I was contemplating holding them directly on the Hong Kong exchange, which in hindsight would probably have been a better idea. And I sold out of O and Store to buy this position because I held them mainly in this IRA account for the tax sheltering. So overall, this is what this looks like all time, and this is 1 week. So this week alone, it was down 13.8% off the back of mainly fear of being delisted. Obviously, they haven't had super great earnings. There's been a lot of things going pretty wild over the past couple months, but you can see a huge chunk of the downturn for this is, I've only held this since August 24th. So overall, this is by far my largest mistake, and I love to be transparent with you guys, and I want to show you exactly what I'm doing. I should have talked about why I was buying this. I like investing in China and Chinese stocks. Some of you know that Tencent for a long time By weight was the largest investment that I had. We invested about 200,000 in 2016, into Tencent, and it had grown. We sold about half of that position to buy the house and the land that we are living in now, at the end of last year. It wasn't the best price on Tencent for the sale. If I had sold in February, I would have gotten 30% more, almost 40% more for the bang for the buck there. However, I didn't necessarily want to sell when it was at the highs, because I wanted to keep it as more of a dividend growth position. But my wife and I, we discussed it, and we wanted to go ahead and move out of Los Angeles and kind of move out of the city. So that is kind of where we're at with the portfolios. Overall, ending the week, it's hard to see red like this in a portfolio. You have to keep in perspective what your goals for your portfolio are, and make sure that you are consistently buying the stocks that you want. And the higher quality ETFs like SCHD, VTI, the total stock market index, like those are just high quality things that you should be buying when the market is red, because those will bounce back eventually. Historically, they've always recovered relatively well. The longest bear market, I believe, has only been about 2 years. So if you're aiming to retire right now, that's really, really rough, and you should try to do whatever you can to extend your timeline to get to a safer retirement point and build up your cash reserves so that you don't need to sell stocks, or be building a dividend portfolio that's going to pay you these over the course of a month or two, and get you your income that you need to survive on the daily. Now, I do want to thank every single one of you. We recently crossed over 2,000 subscribers. If you've made it this far in the video, just drop me what you've been buying this week, or something that made you happy this week. As you all know, we picked up and purchased. We adopted 2 new puppies. They're 2 little Labrador puppies that are about 12 weeks old now. They are growing like crazy and active like crazy, so we are up all hours of the night taking care of them. And it's been a joy and exhausting all at the same time. But one of the things that I want to invest a little bit of our money into is actually getting a trainer to work with our slightly older dog, who's a Dutch Shepherd mix. He is 7 months old, and we need to work on some of his behaviors so that they don't get handed off to the new little puppies. But overall, this is the Dividend Doggo portfolio. I hope that you have enjoyed the insight. If you've had a major loss with the stock, what was it? What did you do? Tell me what it was. I love sharing that level of honesty with people, because it is what it is. No one is perfect. Everyone makes mistakes. And it's definitely going to encourage me to be a little bit more careful about buying stocks that I want, because I see there's potential upside, but at the same time, it just isn't necessarily a great purchase. And with Ally, I feel like that's gonna be a stock that pays off in the long term. I think that their growth and their cash flow will get better and better, and their dividend growth is going to be phenomenal. So I think over time, over a few years, that's going to bounce back and do really good for this portfolio. But let me know if you're planning on buying anything this week. Let me know something that made you happy, or something that you did that made you feel successful. That would be awesome. And if you have a loss that you want to share, or a silly investment that you did, drop it in the comments down below. I do appreciate every single one of you, and I will be coming right back at you with another video here very, very soon. Thank you all for watching again.